What's up, guys? I think this is episode 11, and if you haven't heard the news, the world is coming to an end. So, in this podcast, or this episode, I'm going to talk to you guys about China, the real estate in China, how I think it's similar to 2008 for them, how that's going to impact us here at home and markets, and also geopolitically, how it could impact things. We have a lot to unpack. And if you're interested in any of that stuff, stay tuned, and I'm just going to give you my thoughts. If not, I only took 30 seconds of your time. So, where do we start? Where do we start? Let's go. I got a couple of notes pulled up for a couple of examples. One, in China, obviously they're communist. They can't invest like me and you can, right? If me and you see a good investment in a startup, a local business, whatever, we're kind of free for the most part to do what we want. In China, there's only pockets where they allow capitalism, and majority of the nation is not free to just invest and start businesses and do what you want. That being said, one of the assets that everybody does have access to is real estate. And you got to think about this for a second from a historical perspective. You start off as a nation that doesn't really have much, and you go through your whole, process, the Maoist revolution, all that. And then, then the whole world trade opens up to you in the 90s. And now all through the 2000s, you're roaring. And if you're middle class, you're coming up, but you don't have anywhere to park that money. It's not like in America where you can put your money in a Tesla, a Netflix before it blows up, right? Even in an Apple before it goes crazy. There, you can't invest in any of that stuff. So you're limited because of your country's restrictions to just real estate. So what does any person does that has excess capital is they put their excess capital into any type of investment, right, to earn a yield. And China's problem got even worse because even people that didn't have it were leveraging everything they did have to get in on the real estate game. So what is the real estate game? What happened here? Or what is happening? Because Evergrande is not the only company doing it. This is pretty much happening with all these smaller companies. When I mean smaller, we're still talking about billions of dollars, right? A few billion here, a few billion there. It's just Evergrande ends up being the biggest one. Now, China, if I remember correctly, 12 months ago or earlier in this year or last year, they kind of gave them a little bailout. And they've seen cracks in the system. I started talking about it. I was like, oh shit, this is going to be big. China's already cut their federal, their equivalent to the Fed discount rate down to like, I don't quote me on this, but I believe it's like 2%. And so there's not really much else to do with stimulus there. I mean, you could drop it to zero, but we'll talk about what the consequences of all this could be. So right now, what happened is Evergrande filed for bankruptcy because they can't make payments. Now, I don't know how bankruptcy law works in China, but here, it gives you a chance to pause and restructure and see if you can talk to the debtors and renegotiate and get back on track. It's not necessarily a bad thing, right? But the thing is we don't really know what's really in the trenches there in China. What's because if this is happening to the biggest player, one of the biggest players there, what's happening to the rest? And can you save them all? And what I mean by that, can you do a mass bailout? I mean, America did. We bailed out everybody in 2008, or the banks, not the citizens, but the banks. So, but what's wrong with China now? The problem is it's a different world in 2023 than it was in 2008. China's coming away from COVID. Majority of their population, their youth is unemployed. So they're already kind of like, there's an uprising kind of already happening there. They have an old population. So like over the next 30 years, China's population is projected to go from like 1.2 down to 600 million because of their one child policy. So they have that mounting. And then President Xi is feeling all this pressure. And the war in Ukraine is not going how they wanted. They wanted to sit back and see Russia steamroll, take control, and face no consequences geopolitically, economically, or anything. That's the total opposite. China's sitting back and looking at that and say, shit, if we go try to take Taiwan now, we're probably going to have to go through that same thing, right? And also, what can they do? So let's say that they print. Say they turn on the printers and they bail out these companies. Okay, you build these companies out, you make them whole, or you whatever you do, that money has now entered your system. Now you're going to be dealing with inflation because that money eventually is going to spread all over, right? When that starts happening and you have inflation happen, I don't got to give you a goddamn history lesson on how bad that is. Because what really happens is anyone that has saved anything, their money is going to be worthless because they're going to have to spend more of their savings or their money to go get the same amount of goods. That's also going to piss a shit ton of people off. And that's really going to hamper their plans of being a world, like having a super dollar, right? Like America does, right? I guess I used wrong terminology there, but you get what I'm saying. Because if you're an investor, you're like, well, would I hold Chinese dollars right now? The yuan or the RMB, they're intertwined. Yuan, RMB, they're one of the same, but still, whatever, right? The Chinese dollar, let's just call it the Chinese dollar. Why the hell would I hold that? It's not worth anything. They can't, a price of a banana used to cost, 1 for 1, and now it's 10 for 1. All right. So where does those dollars go? To America. And right now the dollar is holding stronger and it's hurting them even more right now because they can't, because you got to remember at one aspect, yeah, they want to keep their weight. They want to keep their currency low so they could, sustain a certain life for their workers and they could get more production. But in order for them to really go after their, One Belt, initiative and go after Africa and get bigger warships, dog, that costs money. And it's not, you can't just print your own, right? Because you got to trade with other countries. And if other countries are calling bullshit on your currency, you're not going to get the things you need and you can't do the things you need to do for your people. Ask Argentina, ask Chile, ask any country that has gone under, ask Venezuela how that's like. Because if it was easy as just printing more money, don't you think everybody would have done that by now? It's not that simple. And so they're facing inflation if they come and save the day. So what does that leave? And I just told you the slew of problems they're going to have. And what does that do for us? If they go through this inflation cycle, of course it's going to open up problems. Whatever they do, their problem is going to be our problem, right? Because if inflation opens up, maybe there's a short little boom and our dollar is stronger, it could benefit us. Our dollar rallies, right? Our dollar actually becomes stronger. It could actually even help us. Or it could hurt us. If their inflation gets so high that all of a sudden it's costing them more to produce, right? So like all of a sudden for them to import steel or make goods is so high, they have to start laying people off. Now we're having to fight for those products. Everybody in the world is having to fight for those products. We're going to end up paying more for those products. Right? So that's one. I'm not saying I have all the answers, guys. I'm just saying this is not the ideal situation. This is not good. So that being said, what else is left? If they go through a deflationary process, which means the CCP sits back and says, y'all do what y'all got to do. We ain't getting involved, to Evergrande and to the whole real estate stuff. Well, then you're going to have a cycle where stuff is going to blow up. And essentially what's going to happen is their dollar, or first off, we're going to have a bunch of pissed off citizens. All right, a bunch of pissed off citizens that have given their whole life savings. They're going to have a lot of distrust in the system. I don't think they're doing that. I think they're going to do what they're going to do and bail them out. But if they don't, they have a deflationary period, which means prices and everything just start coming down because money is just gone from that system. If you put $100,000 down on a property and that company went bankrupt, you ain't getting your $100,000 back, right? You're talking about billions of dollars here, possibly even trillions, at least $1 trillion, I think. Gone, evaporated. And now your domestic market is thirsty for money because you need money to invest. You need money to, build things and do things. Where's that money going to come from? If the government's not creating that money, and then they're like, hey, whatever money's here is here. That's it, right? It's going to put a lot of pressure on all the people in China to find money to be able to grow the economy. And if people feel that, and they're like, oh man, I don't know, things are very scary. They stop spending less. They start holding on to the little money that they do have. You have a contracting economy. Your economy just contracts. And jobs get destroyed. And innovation stops. Right? So that's, and that also is a problem because if that happens and everything starts contracting, and people aren't spending and the economy's not growing, who's gonna be making stuff? Who's gonna buy the rest of the stuff from the rest of, who's gonna step in to fill that gap? Now you might say, well, that means our dollar will be stronger and that we would invest more into them and say, hey, keep working. Here's our American dollar. Convert it to whatever currency you want. Give me my goods. Yes, and theoretically, yes. But also the tensions we're having with China right now, where we're trying to be less dependent on them to begin with, I don't think is going to bode well for them. So maybe a way out for them is war. Maybe like literally we're going to go through that cycle where it's like a huge, either way you look at it, it's not going to be good for them. So on the back end, they're like, yeah, let's go to Taiwan. Screw it. We have a bunch of people that are pissed off. Get them to join the military. Get the government spending on military goods. Send them out there and let's get this fucking thing rolling. And that's my biggest fear is like, holy shit, they're going to just say that's the way out. Because that probably will start World War III. And I really don't want to, I don't think any of us want to see that, right? And so that leads us to like, okay, so now we see that it's either going to be an inflation or deflation. I could be 100% wrong. I do not see a way that China just kind of smooths this over. It's let the good times continue. I think this is a real problem and they're really going to have to address it now. And finally, for the first time in a while, they're actually going to have to deal with real world consequences of playing their little phony games. And it's getting exposed. I mean, if the money's not there, the money's not there, right? And that's why it's important. So as you can see, both things kind of affect us, right? If it goes through the inflation and the deflation, it affects us here, home, domestically. And all that really does is it really just puts pressure on which way our rates are going to go and how our commodity prices are going to play out. Because think about it, if they go through deflation and the consumption stops, who are we exporting our corn to? Like, we're not going to have excess corn. We're not going to have excess, software to export. We're not going to have excess anything to export because they don't have the money to buy it. And then if it goes into inflation mode, right, where they're printing out like crazy, they're going to say, hey, let us quickly use these dollars, these weak Chinese dollars, to buy U.S. goods while we can before things get really out of hand. And then that's just going to put more demand on our products, which you might think it's good, but it's like, think about the NVIDIA chips, right? I know we have a blockage on them. I'm just using them as an example. If they said, oh shit, our dollar is going to continue to rise, triple order this shit, get it while the cost is low for us because our inflation is running out of control. Now we have to compete with them with funny money and we'll have to pay more. So you see how that starts becoming a problem? And because they make up 20% of like pretty much the world's economic power, what happens in China matters. Remember, we were only 20%, roughly something like that in 2008. And we fell because of a housing crisis, very similar. And even if we bailed them out, we still went through massive pain. And that's the thing. I think either way, if they go with inflation or deflation, whatever they do, there's going to be about 18 to 36 months of deep pain in China before they get back on track. And with that, the whole world is going to follow. They're going to feel a pinch. And so that's, I know I gave a lot of information right now, and I was kind of whatever. So I guess I'll just highlight everything to bring it into a talking point so you kind of understand. You're not like, what the fuck? I just wasted 13 minutes and I don't want to rewatch this shit. So basically, I'm going to use the line from fucking, oh my God. All right, it'll come back to me. But what was the movie? Idiocracy. I love that movie, Idiocracy. Like the doctor is like, basically, your shit's all fucked up. It's like that. And it's true. Basically, we're kind of screwed. We're not. We're going to have to navigate the waters. But this idea of America going through a soft landing, not happening. Something bad is going to happen. We are going to come down and readjust. Do I think it's going to be a Great Depression no. I think it's going to be a healthy, real healthy pullback. It's going to let us recalibrate and actually let us, people like us that have actually saved money and are looking for an opportunity, will finally be presented with an opportunity at the end of this year and the beginning of next year to actually go out and make some good investments and, grow our family's wealth, right? So I don't think it's like that dire, but always, you try to look at what's good for you right now. You got to kind of try to plan, see if we can make a play on this, right? So in the short term, to wrap this up, China's going through somewhat of a 2008 crisis. And the actual housing crisis was they would take money and say, hey, we're going to develop all this crap for you. And they would take more money and say, we're going to use this money to buy more land. We're going to develop more. The third person that pays, they develop the first person's. And they kind of started falling behind with, taking on more debt to buy land, not really building what's supposed to be built, but continuing to take money. That's what happened. And they have $1 trillion worth of this debt. We don't know what's really real, what's really not. Once that kind of shakes out here, it's going to take until the end of the year to really shake out what's going on over there. That's going to have an impact on us depending on which way the Chinese government decides to react. If they go with the inflationary push and they print money and they do all this and that, expect America to keep our interest rates higher longer. It's in our benefit because all of the Forex, all of the world currencies will come to the highest yield, which is America. If they go deflationary and they just let that shit implode, expect interest rates here to fall quicker because we'll get slumped into that recession. That's my best guess. Of course, do your own research, and, get your own opinion, man. I could be dead wrong. This is just what I see kind of playing out. And it's just not spelling good for any of us. It's not spelling, it's not setting up for us to have like hey, soft landing. Everything's great. It's going to finish a very rocky 2023. And it's probably going to be a bad 2024. And then we'll be good. Then we'll be back on track and you'll get your historic 10% gains and, whatever. But we got to go through this recalibration, man. There's no way around this. You could try to mask it and hide it all you want. But the reality is with these higher rates, we are going to experience pain. And with what's going on in China, we're going to experience pain. And think about it. If this is happening to America and China, where's the rest of the world at? Right? I know everybody else isn't just like perfect and, so there's problems in the economy that are real. Once again, I'll end it with saying this. Do I think it's the end of the world? No, it's not. I still think it's, hey, if you got a really good deal in front of you, don't be scared. Pull that deal. Trust in yourself. Trust in your homework. Don't let no one bully you into saying there'll be a better, there's no such thing. There's no such thing as a fucking perfect time to invest, right? You got to figure out, and I'll say this until I die, does it make sense for you? And if it does, I wish you the absolute best luck. And anyone in your life that's trying to dissuade you from it, maybe they mean well, but you're your own person. Make your own decisions. I hope this video was informational. I'm sorry I was just all over the place. I just wanted to deliver everything and just put it out there. If you liked it, hey man, like it, drop a comment for me. It really helps, and share it with a friend. I appreciate your guys' support. Join the Discord, man. It's fucking $5 a month. We'll get in there and have a grand old time, right? All right, guys, take care until I see you on the next one. Next week, I'll try to drop Thursday, Friday.